Well, hello and good morning. You're doing great. I'm waiting for some folks to join us in the Zoom room, which may or may not happen, but we should be streaming live to everywhere. So we should be streaming live to LinkedIn, X, Facebook, and YouTube. YouTube is obviously where we will uh, save this video in the UH playlist for those of you who are a part of this semester's cohort in personal finance at the University of Houston, the Bauer College of Business. And again, I'm Jim Munchback, and we're about to begin. It's a couple minutes after. Get started here in a minute. Today's lesson is called Connie and the Credit Crush. That's the assignment, or that is the lecture. That's the assignment. That's what we're going to talk about this week. Is the Credit Crush assignment. So let's just get started and we'll talk a little bit about it. uh, so we'll go over last week. We instructed you, part of your instructions in the assignment was to make yourself 10 years older, which looking at your uh, looking at your assignments, it looks like everybody did that. Let me get rid of that background real quick. There we go. Uh, so that was part of the assignment. The next part of the assignment was do a little research, figure out your income after graduation based on your dream job, and then also take a look at your expenses. This is again something that you are going to have to research to make sure you had the an accurate list of expenses. And this is challenging for many students because you're not actually paying your expenses, someone else is. And so this is something we'll keep an eye on. Today I want to make sure you know what the most important screenshot is for this week's assignment. I hit the wrong button here. Let's get that most important screenshot and then we'll do a capstone review. So that's kind of where we're going with this lesson, this lecture. And so this is where I'm sitting right now in the studio pushing these buttons. And so when I push a button that's wrong. So in case you didn't know, I got this new, I had a couple students asking me about the setup and I got this cool, I'm pushing the button over here and it's raising and lowering the desk. And so it's a standing desk. I do stand quite regularly now, which is not easy. It's not as easy as it sounds. And I'm currently, if you see me bouncing, it's because I'm sitting on a yoga ball, trying to activate that core a little bit as I get older, as you get older, as we get older. Guess what? The body just, it goes, it goes. So today we're going to talk about the Credit Crush assignment. So let me just give you kind of an overview, a quick overview of this week's lecture and this week's lesson, this week's assignment. And again, this will be in the UH playlist. This video will be saved there. It's not there right now, but hopefully you're watching live on YouTube. So let's just jump right in. The big idea. So last week I shared with you a little bit about how I got to be familiar with the cost of credit. And that was last week's assignment. So this week is called Connie and the Credit Crush. Last week was the setup, but there she is. That is my bride. And I shared a little story about how after we got married, my wife, who is not the spender, she's the frugal person in the family, the sensible one. And especially when I was younger, I was very much, I made good money. I was an auto mechanic. I went to trade school before I went to college. I met my wife in college and we got married pretty young. But what happened was I was working as an auto mechanic after graduating from college. We got married. We had our first child. I think by the time this story happened, but bottom line is I was spending like crazy. I spent a lot of money, and my wife, Connie, she identified, I want to get that ugly guy out of there if I can. So that's my wife. Anyway, sorry I don't have a better picture. That dude. Do you like looking at pictures of yourself? It's not fun. I try to avoid it. So, but I like looking at her, and I have some other pictures of her, but just not handy. Anyway, I shared a little story about my wife, the fight we got into, but the bottom line was Connie, my wife, she identified the fact that we were paying the minimum on our credit cards, and she's the one who paid the bills. I'm the one who earned the money at the time, but she didn't have enough money to pay extra on those credit cards because I just kept spending and spending. And I would go take cash out of the bank account, and then she would go write checks, and she'd get checks that came back NSF, insufficient funds. And it was a terrible way to manage finances, and it was all my fault because I was the one who felt like I made good money and I should be able to spend it any way I wanted to. So that was the story. We got in a fight when my wife found out that I was spending money after we came together and agreed that we would do a spending freeze. And the spending freeze was because Connie showed me these statements that we were paying in our credit. And these credit cards and these credit accounts, they were. I'm going to show you, I'm going to take you to a financial plan and kind of show you what she showed me. And this is the big idea of today's lecture and this lesson. It's the big idea of the Credit Crush assignment is for you to understand, to be able to experience and see and understand what my wife helped me see and understand back then. So we're going to go back to Right Capital. I am in Billy's plan. And hopefully you know by now to get to the debt strategies, you tap those three dots. And when you tap those three dots, it will take you to debt. And so when you get to debt, you're going to see your strategy. So that's what we're going to talk about. I'm going to walk you through that. But my wife showed me how we were making payments, and our payments were much like Billy's payments here. I'm going to take you back and show you the strategy. Right now we have action items, highest to lowest. This is what you're going to do this week. Last week you set up your Credit Crush assignment. This week you're going to actually do the assignment. But the big idea is for you to be able to see how expensive debt is. And I'm going to show you some debt strategies to help you understand how it works. But I just wanted to jump into this financial plan for Billy and kind of get started with that as we begin today's lecture. So right now we've got it set up. I just changed Billy's strategy to pay all of the debts equally. So if we go to details, you can see all of the things that Billy and Sally in their plan they've added. Now you may be still a little puzzled about why you were asked to make yourself 10 years older and then to add a bunch of debt to your financial plan, and it's really primarily for this assignment. The big idea is for you to see and really understand the high cost of credit. And so if you look, what my wife helped me see, and she did it with paper and pencil on a paper statement, and she showed me we were paying the minimum, and the minimum was not reducing our balance. Okay, that's the bottom line. That's the big idea is when you become a victim, a target of the credit industry, the scam is that you get an account, you pay the minimum, and you never get out of debt. It's a very simple strategy, but it is a very effective strategy because people like me and maybe like you don't think about the cost, all we think about initially is what we want. And that is absolutely how I was when I got out of college, before I learned this painful lesson. When I learned this lesson, it made me angry, made me feel ashamed and foolish, because I realized how stupid I was being with my money. So you're going to see in Billy's situation just one example. Let's just go to the Wells Fargo. Let's do monthly. Now, I think right now we have, I'm going to try and find payments. So let's look at Sally's Wells Fargo. Let's just see if we can find Sally's Wells Fargo account. This one will do just fine. And you're going to see, as you play with your financial plan, with these make-believe credit accounts that you set up for your car and for your home, but mostly for your car and for your credit card. If you're paying the minimum, which I hope you did for the purpose of this assignment, you're going to see the same thing in your plan. You're going to see, okay, over here we have Sally's Wells Fargo account. She's got a beginning balance of about 25 grand, and her interest is 321, and her payment, and this may be a little unrealistic. I'm not sure Wells Fargo would allow you to pay a minimum payment of 125 on a 25 grand, but they might, and they certainly will allow you to pay a payment that's less than the interest, which is how you get into this trap. So if you just look at the ending balance, and again, this is what my wife showed me way back when we agreed to go on a spending freeze for the purpose of reducing our debt so that we could get out of debt. And that's when I messed up, and you may recall I was working out a deal with my buddy who had a pistol, a 357 Magnum Smith & Wesson, beautiful pistol, and I really wanted it, so I bought it, and I was paying him out every time I got paid. But that was a breach of our agreement, our freeze, our credit freeze, our spending freeze rather. And so what my wife had showed me, and what spending freeze so that we could get out of debt, was when she helped me see what was happening to our balance. So if you look at her balance, Sally's balance in this financial plan, Billy and Sally, you see that the balance is going up, but it's the same, 125, and the interest is going up because the interest is based on the balance. So just so you can see how to get here, you're going, again, you go to the three dots. That's how you get to debt. Your assignment this week is to play around with these strategies, simply because I want you to learn. I want you to understand how this works. And now that you've added these credit accounts to your financial plan, you will have this information in your financial plan so you can manipulate it and look at it. And that's really what I want you to do. So you go to the debt. That's the debt. Again, it's kind of weird to get there. There used to be an upper navigation like profile and dashboard and retirement. I'm going to click on these so you can just see. I think I have a slow internet connection today, which is not cool. Anyway, these are the upper navigation that we're looking at. My iPad and I are not having a good relationship at the moment, but you can just see those upper navigation, and you spend most of your time in dashboard, retirement, and profile. When you go to profile, this is where you use this upper tab the most. And then you have these lower tabs. So it's pretty, navigating your financial plan and Right Capital is really pretty straightforward if you just look at the upper navigation and the lower navigation. But for this exercise, when it comes to your debt strategies, it's a little weird. You have to click on the three dots. So I get this question every semester. How do I find the debt? I can't find it. So if you're watching the Zoom meeting, you're seeing it there live at 10:22 a.m. on 16 February, year of our Lord 2025. There it is. So then you have these three Strategy, payment, and details. Just be familiar with that. Play around with that because you're going to go to strategy. You're going to hit the action item, and that's where you get to select the. Let me see if I can make that bigger. That's where you get to select which debt strategy you want to apply in your plan. And your goal here is to show me some screenshots before and after. And typically, you're going to want to use the highest to lowest. And then don't forget, scroll down and don't forget to hit that refresh button, because if you don't do that, it won't change. And then when it changes, you're going to see this. And I'm just going to mention this real quick because part of what we want to do today is review this assignment, but also I wanted to kind of give you some warnings about your capstone assignment. So you see that this debt saving for Billy and Sally have a ton of debt, and you may feel like you now have a ton of debt in your financial plan. Well, maybe it's a ton, maybe it's half a ton, it's a lot, and that's good. That's because I want you to learn how these debt strategies work. I hope you don't have this much debt in your real life ever, but I do want you to see how it works and how huge the expense is. Speaking of how huge the expense is, you see a number there on your screen that is redonkulous. Okay, Billy and Sally have, when they apply this debt strategy, they have a savings of almost $750 billion. That's 600 or a billion, $750 billion. That's 657. I can't even say it. It's million. It's a lot. And what happens is when you do this assignment and you submit it and you don't pay attention to that redonkulously high number, you get a 50% deduction. Now, it's a 50-point deduction on your capstone assignment. On this assignment this week, it's a 50% deduction. It's like if you submit your screenshots and you say, okay, I have this much savings in my debt strategy, and you don't even mention how big that number is, you're telling me you're not paying attention or you have no concept of money or the amount of money that you're dealing with in your plan. Now, is this wrong? Well, no, it's not wrong, because when I set up Billy and Sally's plan, I set it up the same way I asked you to set up your plan. And I set it up for the purpose of being able to show with kind of an exaggerated illustration of how this works. And because I did that, it just makes this number ridiculous. But that's okay as long as you can go in and see why it's ridiculous. So here we go into payments. Again, there are three little columns there. And you can see all of the debt. Some of these need to be removed because this is my Frankenstein plan, okay? This is the one I play with, I add to, and I just mess around with it. So nothing in this plan is really that accurate. It's just for show and tell purposes. Your plan will be a little better, but it'll still be for show and tell, because your job is to show me and tell me what you're learning and how this works. But anyway, so there's payments. You can see all the payments, but the details tab, that's the one that's really important. And that's the one, it's really helpful, I should say. So that's where you can pick one. And again, right now I have the strategy set up so that we're paying the highest to lowest. So you see everything's changed. If I go back to the strategy and I say same priority for everything, and then I remember to hit refresh, and then I go back to the payments, or the details rather, then you see all, and I have annual or monthly, you can do either one. But you can see then in Sally's Wells Fargo account, you get all this detail. And this detail is what I want you just to pay attention to and understand how this works. Mainly how the credit card companies take your balance, they charge you an interest, you make a payment, a minimum payment. That's what most people do. And then your ending balance doesn't go down. It goes up and up and up and up. And so by the time you get years down the road, we in monthly or annual? Let's go annually just so we can see. Like by the time Billy and Sally die, if you go to the year 2070, they have a $16 million balance. Now, is that realistic? Could that really happen? Maybe not in that dramatic a fashion, but it absolutely happens. People continue to get buried in debt because they pay less on their balance, and they let the interest goes up, and if they miss a payment, it goes up even more. So that's the big idea for this week's assignment that I want you to understand. The most important screenshot, the one that I want you to pay attention to, is that one that I just showed you where you have that. Let me show you one more time. Where you have, when you change your strategy and it goes from zero savings because you're paying everything as if it's the same with no adjustments. I want you to click on the action button, and I want you to select which strategy you're going to use. And I'll tell you a little secret. Highest to lowest interest rate is usually the best strategy, not always, but usually. Then you have to remember to go down and hit this refresh button. And this is the most important screenshot for this week's assignment that I want you to just pay attention to. And that's it right there. Okay, now that is a huge number. And if you get this big number, anything over $5 million, it's going to cost you 50% deduction. So don't do that. Just give me a comment, take a look, go, oh, yeah, I see why that is so much, because I have this credit card like Sally did with her Wells Fargo, and it's ridiculous. Just do a little research, pay attention, show me that you're paying attention, that you're actually in your plan, looking around, doing a little analysis. So that is what we're talking about. So back to the list. Let me change this. So that's the big idea. The desired outcome is simply that you know what you're looking at in terms of your financial plan. Hopefully by now you know how to update your data cards. We talked about mortgage, the car loan, the credit cards, and I'm just going to jump in real quick. And so you go to profile, and this is where this is profile is where you're going to go to make changes to like your credit card. So these are all of the credit cards. I should delete some of these because some of them are just mistakes. I'm going to delete that one right now. You can do the same thing if you have made a mistake. That one has nothing there. But when you do have one, like let's go to Sally's and just take a look. And this is where you'll see the fields, the data fields in each of the data cards that you need to pay attention to. So we've got APR, annual interest, annual percentage rate, the minimum payment. These are things you want to pay attention to because this is information you're putting into your financial plan. And you've heard the term before, garbage in, garbage out. Well, I promise you, your financial plan is one of those things that if you don't put good information into your financial plan, you're going to get really bad projections, really bad information out. So garbage in, garbage out. This is where you get to be a little more careful about what you're putting into your data card. So just pay attention to each of these fields in each of these data cards. When I say a data card, we're talking about each one of these. If you go to add an account and you want to add a card or add an investment, I just clicked on investment because my fat fingers clicked on the wrong thing. So I'm going to hit delete. Yes, I want to delete that. So again, if I go to add account and if I click on card, this time I'm going to be very careful. Click on card. Now it's going to give me the ability to add a credit card. And this is where you have to pay attention to the data because, listen, last week when you did the setup for the Credit Crush assignment, when you did that, I was very generous. Well, I think I was very generous. I didn't give you deductions for making minor mistakes like not paying attention to the data in the data fields and the data cards. And so if you feel like, hey, I did great, I'm good to go, I'll just do the same thing this week. No, this week I'm going to pay a little closer attention. And if you have errors in those data cards, you're going to get deductions. And here's the big thing that I want to make sure you know. This is kind of the big idea that I want to make sure you know is where are we here? Somewhere. Okay, I don't see it here. But we're going to talk about, let me just go over here and see if I can get you to the right. I'm looking for, let me see if this is good. No, this is a review of what we've been and where we're going, and I'll get that soon. This is probably the wrong one too. Okay, it's not review time. I was just looking for, here's, so I want you to know that somewhere in here, I have it on the list, and I wanted to show it to you. And it really is simply this. I can't find it. I'm sorry. I wanted you to know that your capstone assignment is, it's a combination of all of these assignments. Hopefully you know that by now. It's really going to be a simple assignment for most of you because you're doing a great job going through each of these individual assignments. And each one of these assignments, like this week's assignment that deals with your financial plan, each of those will be a part of your capstone assignment. And so when you get to your capstone assignment, I don't want you to feel like just because you got full points on one of the assignments throughout the semester that you're good to go in your capstone. I'm going to remind you every lecture, every week, and every assignment to review certain things, because when it comes to your capstone assignment, which is worth 200 points, if you don't correct these things, and it's on you to correct them. I'm not going to, sometimes, like last week, I didn't even pay attention to a lot of the detail that went into the data cards because I'm going to do that this week. So this is a very important assignment, but it's important not just for this week, it's important in the context of the capstone. So please hear me and know that you can still get deductions in the capstone if you don't pay attention to these details. So these are the details. Let me just start. I'm going to just jump through a couple of things. Let me get this out of the way. Okay, we've talked about the most important screenshot. Let me get to, class collaboration is one of those things that we have, most of you have done a great job, but some of you have missed it. And so when you miss it, you get a deduction, a 15-point deduction. And so this week, I want to tell you what this week's class collaboration is. And I'm going to introduce you. Last week, we talked about wisdom, consumerism and wisdom. And you guys had an assignment last week. Your class collaboration secret class collaboration was to comment on the what was said in the interview between Tucker Carlson and the president of El Salvador, where he said he's beginning his position as president by asking for God's wisdom. And I wanted you to make the contrast in your mind that seeking wisdom is a really good idea. And if you just let our culture of consumerism direct your path, you will make a lot of mistakes. And that's what this whole lesson on the Credit Crush assignment is about. If you just listen to ads and you just wander through your life with no plan, with no strategy, without seeking wisdom, you're going to make a lot of mistakes, and they can be very painful mistakes. So that was last week's class collaboration. This week, I wanted to introduce you to what's something that is Uh, it could be new to you. I don't know. It's something that is, it's called betrothal. Now, I grew up in a very, I guess you could say, a very religious home, and religion was kind of forced onto me, and I had this major rebellion in my life and all that. That's a whole nother story. But one thing that I got out of my upbringing, and part of it was religious training, it was the idea of betrothal. Now, I'm a Christian, and Christians are taught to believe that when you get married, you become one. And so what's mine is hers, and what's hers is mine. It's called betrothal. It's a different idea of marriage than our culture of consumerism wants to accept. Because in our culture of consumerism, we have something called a prenup. If I get married and then divorced and divorced again, and then I get married again, I want to have a prenup, a prenuptial agreement that says, hey, what's mine is mine, and what's yours is yours, but you're not going to, if when this marriage fails, you're not going to get what's mine. That's a prenup. Now, seems to me, this is my opinion, but I'm very curious about what you think. My opinion is that sets you up, and trust me, I am a certified financial planner. So if my client tells me I have a prenup, it is my job as an independent fiduciary advisor to review that prenuptial agreement and make sure that that financial plan is structured in such a way that it takes into account the prenup. And that becomes challenging, obviously, if I'm trying to serve both spouses, right? But it is what it is. And it's something that, in my training as a certified financial planner, it's something that I've had to deal with. But in my personal life, in my family, in my relationships, my philosophy is that a prenuptial agreement is a bit of a roadblock to a happy and successful and uh, lifetime marriage, which is really what marriage is supposed to be, in my opinion, from what I was taught, what I believe, that marriage is for life and you should join together with the idea that you're betrothed. You raise your family, you commit to one another. It's a whole different level of commitment than is part of this culture of consumerism. And that's this week's class collaboration secret is I want you to share with me how you feel, what you think, what do you believe about this idea of betrothal as opposed to getting married and have a prenup. So each of you, not each of you, but many of you are going to choose one day to start a family, to join your life with someone else's. Maybe you're going to live together. Maybe you're just going to move in together and share, I don't know, the cost of the utilities. I'm not asking you to tell me all of that. I just want you to comment and share a little bit about how you feel about the idea of betrothal versus having a prenup. What do you think? Is it a good idea, bad idea, dumb idea? Uh, so that's what I'm hoping you will do. So that is this week's secret class collaboration. And these are pictures of my family. And so let me just share a couple of things. I told you these details in your data cards matter. So just be sure that you've paid attention to the details. First one is your birthday. That's pretty simple. If you haven't changed your birthday, your account will be deleted. So there's a default birthday there, and if you put that off, those get swept clean every once in a while. So just FYI. Income is next. This is one that requires you to do a little research, but is very important in terms of the overall. Again, we changed your birthday so you're 10 years older, but you're also receiving the benefits, the imaginary benefits of receive if you get your dream job. So that is what this week's or one of the things you should have done last week, but it's something I want you just to pay attention to as you go through the semester. especially as we get closer to the capstone assignment. So your income is a very important part. And then we get into expenses. Expenses, again, this is an area that many students have trouble with because many of you are not paying your expenses and you don't even have a clue how many expenses come into your life that you become responsible for once you get out from under the umbrella of provision of your parents or your scholarship or your student loans. Once you get out and have to pay all of the bills related to your life, that's a whole nother game. And if you're doing that, you know what I'm talking about. So just pay attention to your expenses. Again, it's an area where the closer we get to the capstone assignment, the more attention I'm going to be paying to your expenses, just to show me that you get that there are a lot of expenses that come with life. And so just be paying attention to those expenses. You can do a simple approach, which is actually not acceptable in this course. You have to do the detailed expenses. So the simple approach is great for many clients, but it's not really great for you. I want you to do the detailed approach. So I think hopefully that's clear. If you're not clear about that, then ask someone in GroupMe, or you can send me a text. That's one of the things, in fact, that I wanted to mention. I told you these were the things I wanted to cover. And down there near the bottom is Q&A, texting me your questions. And I usually do this every semester, and I think I may have forgotten this semester to tell you, if you have questions that you want me to cover in the Zoom meeting, you can text those to me. Please don't text me questions about your assignments. Those questions should go to GroupMe. But if you have questions that you want me to cover, you can text those to me, and I'll cover them in class. I'm not going to. I'm generally very busy, and when you text me questions that are somewhat random, especially questions that I've already covered in the lecture, I don't really want to reply to those. So, but if you send me a question that you want me to cover in the Zoom meeting, I appreciate those. I look forward to getting those from you. So you have my mobile number there in the syllabus. Sorry about that. I'm actually looking at my screen trying to remember what we do next. So here we go with your home. I got a great article this week. I shared it on LinkedIn. If you follow me on LinkedIn, you know that I posted this article from a certified financial planner. It was about the mistakes people make with mortgages. It's a good read, pretty short article, very packed with good insights. And so that's something you might want to read. I might post it in Money Study Group, but it's not part of your assignment. It was just helpful information. A mortgage, buying a home, is one of the biggest investments you'll make in your lifetime. So hopefully this assignment will help you. Part of what you're supposed to do last week and this week is a little research about what home you can afford based on the fact that you have this job, your dream job, and you're 10 years older and you need a home. So your assignment was to find and purchase a home and set up the mortgage. So I think that's what we have here, a loan that is a mortgage. And that's a type of loan, so make sure you pay attention to that detail in your data card, along with all of these other details related to the mortgage, the loan. So pay attention to those. If you have questions, jump into GroupMe. If you're one of those students who really gets this and you're willing to help other students, feel free to grab a screenshot of your assisting another student, and you may get some extra points for that. Okay, next I'm just going to cover the car. So this is another data card. It's your car loan, and you're supposed to go out and buy that dream car. So this is just kind of where you go. Again, net worth, you add a loan, it's a car loan. You should be able to find a car loan right there. Super easy. Then you have a whole new set of fields in this data card that you'll want to pay attention to. So pay attention to those as you buy your car and set up your car as a it's an asset and a liability for most people. Uh, anyway, that's your car. Now your credit card. Let's talk about your credit card. Your credit card is another one of those make-believe things. Hopefully, you don't have a credit card with $10,000 in real life, but that's your assignment here: is to set up a credit card account, do a little research, figure out how much interest will you pay on a credit card, and again, this is the data that you'll see in your credit card, and this is what you want to pay attention to. So do that. Just if you did it last week, you should have done it last week, but take another look at it, because again, these are all things that you're going to get exposed to in your capstone. Exposed to as in capstone. Okay, let me see. I got something going on here. Let me see if I can get rid of that. Get rid of that. Okay, this is the main event. This is where you're going to change that strategy, and this is again the most important screenshot. And so, what are we looking at? Class collaboration, Credit Crush. I'm probably not in the right screen show right here, but we talked about this earlier. Just take a look at the details in your plan, and this is the screenshot that's really going to make, this is where the light should come on for you about how expensive it is to have debt. And so do that, pay attention to that, and let's see. Again, here's the most important screenshot. That's the slideshow I wanted to show you. So if you watch, when you hit that refresh button, it's going to recalculate and show you how much you're going to save using the debt strategy that you selected. So if you have a huge number there, like in this case, in this screen, it's $831 million. $5 million. If you have more than a $5 million savings, you absolutely need to take a pause, take a look, find out what's going on. You should do that even if you have 100,000 in saving. You should know what's happening. That's the whole purpose of this assignment. So that's what that is. It's the most important screenshot. And if you'll just take a minute and kind of digest that, hopefully you're able to do that in your financial plan easily without any problems or issues. So it's now time for questions and answers, and I don't have any questions this week. So again, if you want to send me your questions, you can do that via text message. You can also post them in YouTube or LinkedIn or Facebook or Money Study Group, but those questions, I review those, I see them, but they're not timely. So if you want me to cover a question and add a few, maybe even a tutorial, you can text me and I'll do that. But don't text me questions about your assignments as if you want me to answer your questions for how to do something in your assignment. You can do that in GroupMe. But if you're looking for some general, deeper understanding of something in your financial plan or throughout the semester related to finances, for example, next week we're getting ready to, let me show you what we're getting ready to do. As we get into these topics that are coming up, you will about questions you might have that can help you, especially questions that can help you perform better in your capstone assignment. That's where we put it all together. It's worth 200 points. It's like the final exam, and each of these individual assignments become a part of the capstone assignment where you put it all together. So we've covered saving, You did a great job on that. It was a pretty straightforward lesson and assignment. You did a budget. Again, pretty simple. It's in the can. It's done. Uh, you did the credit report. You learned about what is involved in your FICO score. That was hopefully a helpful assignment. I hope you will always do a credit report, free annual credit report. You can do 3 every year. So that's done. You did the parental interview. That was great. It's again one of my favorite assignments to read and grade. You did a great job on that. Last week, you did the setup for this week's assignment, the Credit Crush setup. This week we're doing setup. This week we're doing the Credit Crush assignment, where that screenshot becomes pretty important. Coming up next week, after we get through this week, we'll do something that may not seem like it's very relevant to personal finance, but I promise you it is. It's called bargaining and negotiating. So that's coming up next week. After that, we're going to spend some time on insurance. I may have mentioned before that if there's one thing I'm an expert in, I'm not real proud of it, but it's true. I've got a lot of letters after my name, and they relate to insurance. I was a State Farm agent for many, many years. Before that, I was a State Farm claims adjuster. One of the best jobs I ever had. It didn't pay very well, but it was awesome. Great job. I loved that job. Probably my favorite job ever until this job, where I work for Bayrock as an independent fiduciary advisor. And I love teaching too, but it's a part-time thing. I'm an adjunct. Anyway, insurance, again, we're going to try to cram in as much as possible into one lecture and one assignment. So again, if you have questions or you want me to cover anything relative to insurance, I'm happy to do that, but you're going to have to ask. My goal in the insurance assignment and the insurance lecture is to try to encourage you and point you in the direction of becoming a competent consumer of insurance, because you're going to spend a lot of money on insurance in your lifetime. So that's my goal in that assignment. And then we get into the most popular topic, the most popular lecture, the most popular assignment topic in the course, which is investing, where I'm going to teach you 4 investment strategies that are designed to help you maximize returns and minimize risk. And that's diversification, asset allocation, which is the most important determinant of your portfolio's returns. So the second strategy I'm going to teach you is asset allocation. The third one is dollar cost averaging, which in my opinion is the most powerful investment strategy for folks in your age group, for most of you in your age group. Some of you are not in the same age group, but generally for a college student who's in a business college who has the prospect of getting a job in the business arena, dollar cost averaging is the most powerful investment strategy. I'm going to teach you how to do it. I'm going to teach you how it works, and you're going to be like, wow, it really does work. That's number 3. Number 4, the fourth investment strategy designed to help you maximize returns and minimize risk over your investing lifetime is portfolio rebalancing. So those are the 4 investment strategies I'm going to teach you in the context of the perfect investment, which is a 401k or a company match. If you work for the government, it's a 457B. If you work for a nonprofit, it could be a 403B, but the company match. You're going to learn about the power of the perfect investment, and I'm going to teach you the other 4 investment strategies in the context of the perfect investment. And I promise you, you don't want to miss that. And so you're going to learn a lot about investing in a very short amount of time. And I'm going to tell you a lot of stories to try to illustrate those strategies. And they will make sense, I promise. I know that's true because over the years, I've been doing this for many years now, students come back over and over and tell me how much they appreciate and how much they learned and how much more confident they were when they sat there the first day, when they get that when you get that job, you're going to have to make some decisions with HR about how are you going to handle these options, including your 401k. And you're going to be prepared for that, and you're going to know why you're making the decisions you're making on day one. So that's always the most popular topic, and I enjoy it as well. Let's see. And then after that, we're going to just spend a little more time on asset allocation because, like I said, asset allocation is the single most important determinant of your portfolio's return. So you need to understand about asset classes like small cap, large cap, international bonds, and you have a whole range of bonds from U.S. bonds, uh, U.S. bonds, foreign bonds, municipal bonds. There's a whole range, and each of those is its own. It's the general asset class, which is hugely important for you to understand asset classes. Those are important because that's what asset allocation is and portfolio rebalancing. It's all about asset classes. So we're going to spend some time so that you understand asset classes. You're going to also jump into tax advantaged investing. Remember the three laws of personal finance? The first law is the law of spending and saving. You spend less than you earn so you can save more for what matters most. That's important. If you don't do that, nothing else will matter. You will fail financially. Number two is the law of tax advantaged investing. The IRS makes the rules. My job is to teach you how to take advantage of them. And your job is to take advantage of those rules. And that's what tax advantaged investing is. And it's all about different types of accounts, like a Roth IRA, a tax-free type of account, a 401k, the perfect investment, a tax-deferred 401k, or a tax-deferred traditional IRA, tax-deductible IRA. These are types of accounts. And things like the 401k, the reason it has that title is because that's the title of the paragraph in the IRS code that outlines the rules, boundaries, and limitations for a 401k. So you're going to spend some time in your assignment to learn and demonstrate to me that you understand these different types of accounts. You're not going to be an expert, but you're going to know enough to understand why tax advantaged investing is so important. So that's the tax advantaged investing. And then week 12, this is an assignment that you really, well, you will get a pass on this assignment if you have earned enough points. You won't have to do the blueprint for financial success. But I want to mention early on in the semester, you committed to using a tool to track your expenses throughout the semester. So when you do this, if you need the points for the blueprint, you're going to have to do the whole assignment to get the points. And one of the parts of the assignment is for you to show me the data. When you do your spending tracker for the whole semester, you have to show me all of the transactions you captured using the tool, the tracking tool that you selected, that you committed to use early on in the first week of the semester. And then you have to show me a graph with categories of expenses. That's part of this assignment. So just be aware that's what you're going to have to do if you do this assignment. The third thing is you're just going to tell me, what did I learn by being accountable with my spending this semester? So that's coming up. That's week 12. That's the blueprint assignment. Many of you won't even need that assignment because you need 950 points to get an A in the course. And if if you've gotten full points on every assignment, you can be pretty sure you're going to get 200 points on the capstone. It's not guaranteed, but you can be pretty sure. And you're going to get, if you got full points on every assignment, you're going to get the 200 points for class collaboration. So by the time we get to assignment number 12, the blueprint, you will know whether or not you need to spend the time to do that assignment. Or what I hope for you, if you've been taking advantage of the early assignments and capturing all those extra points, then by the time we do assignment number 12, the blueprint, you will be able to choose to kind of take a pass on that assignment so that you can spend your time on those classes and courses where it's a little bit more intense at the end of the semester, where there may be a final exam that you need to prepare for that may be more challenging than this course. I try to follow Warren Buffett on teaching personal finance. One of my favorite quotes from Warren Buffett is, uh, investing is not like Olympic diving. You don't get extra points for difficulty. And that's how I try to teach this course. I want it to be simple, straightforward, practical, and it can really make a difference in your life if you master. But it's not as easy for everybody as some. It's super easy for many, and some folks struggle a little more. And if you struggle a little more, you need to do that assignment. But if you're way ahead, my hope for you is that you get way ahead and that you basically get to check out of this course early so that you can spend some time on the other courses. And I hope that we can stay connected. So that's why I always play this little thing at the bottom. Let's connect on LinkedIn. You never know when you might need to reach out to someone that you trust. I'm not going to try to sell you anything, because by the time you get to the point where you need the services of a professional money manager, hopefully I'll be retired. But anyway, I want to be able to help you, and I want to be someone in your life you trust, someone in your life you feel comfortable reaching out to with questions that matter to you about your finances. So anyway, that's why I keep playing that. Finally, the capstone, again, it's worth 200 points, and it's where we put it all together. So it is now time to close. I think I covered everything. Let's see what's on the next time screen. Review time, we already did that. I'm going to put just finally one more time where you can find this video. And next week we're going to do bargaining and negotiating. But this week, it's all about the Credit Crush assignment. And don't forget that most important screenshot. And don't forget, this week's secret class collaboration is about betrothal. If you don't answer that, you need to answer, engage in lots of course discussions that are in Money Study Group. And the ones that you see that you're interested in, go ahead and leave a comment and include that in your assignment. That's great. That's how you're earning 200 points for class collaboration. But don't forget that you also have this one special secret class collaboration each week. And this week, it's betrothal. There's a thing called prenup. If you don't know what that is, Google it, ChatGTP that one, and just understand how it works. But then there's a thing called betrothal. And what I want to know from you is, what do you think? Which one of those makes more sense to you in terms of your life and what you want out of your life and what you think you should expect or hope for with a life partner? So that's this week's secret class collaboration. And that's it for today. I'm going to wrap it up and